The IRS is about to know every single crypto move you make. We publish a new video every week about crypto taxes, including tips on how you can save on taxes from crypto trading and avoid audits. Be sure to subscribe below. Starting in 2026, there's a new form that will track every Bitcoin sale, every Ethereum transfer, even when you move crypto to your own wallet. It's called the 1099 DA. And if you own any cryptocurrency, this changes everything. Today, I'm breaking down exactly what this means for your crypto portfolio, your privacy, and most importantly, your taxes. Plus, I'll show you what you need to do right now to prepare, because ignoring this could put you on the IRS's crypto watch list. Let's start with what's actually happening. In January 2026, millions of crypto investors will receive a form they've never seen before. The 1099 DA. DA stands for digital assets. Think of it like the 1099 forms you get for stocks or interest income, except this one is specifically designed to track cryptocurrency. And here's the kicker. It doesn't just report what you sold, it reports every single transfer you make. Move Bitcoin from Coinbase to your Ledger wallet, that's reported. Send Ethereum from your wallet to Kraken, that's reported too. The IRS will see it all. But wait, it gets more interesting. For 2025, the first year, these forms will only show how much you sold your crypto for. They won't show what you paid for it. So imagine this scenario. You bought Bitcoin at $60,000, it drops to $30,000, and you sell at a loss. The IRS sees you sold $30,000 worth of Bitcoin, they don't see you lost money, they just see $30,000. Without proper reporting on your end, they might think that's $30,000 in profit. Now, who's sending you these forms? Every major US crypto exchange, Coinbase, Kraken, Gemini, Uphold, Robinhood, Fidelity. If you've used any of these platforms, you're getting a 1099 DA. But here's what's really concerning. The form doesn't just show dollar amounts, it shows your wallet addresses. Every wallet address you've ever sent crypto to from these exchanges will be reported to the IRS. Think about what that means. Today, when you move crypto to your private wallet, it's relatively private. Starting in 2025, the IRS will have a record of that wallet address. They won't necessarily know it's your wallet initially, but here's how they connect the dots. Let's say you transfer Bitcoin from Coinbase to your private wallet. Coinbase reports that transfer and your wallet address to the IRS. Later you move that Bitcoin from your private wallet to Kraken. Kraken reports receiving Bitcoin from that same wallet address. Then you sell it on Kraken. Suddenly, the IRS has connected your Coinbase account, your private wallet, and your Kraken account. Over time, they're building a complete map of your entire crypto portfolio. Every wallet, every address, every transaction. The video presenter calls this a massive information grab, and they're absolutely right. Now, let me walk you through a typical crypto journey under these new rules. Step 1. You buy Bitcoin on Coinbase. This purchase is not reported on the 1099 DA. Buying isn't a taxable event. Step 2. You transfer that Bitcoin to your hardware wallet for security. This transfer is reported on the 1099 DA. Coinbase tells the IRS you moved Bitcoin worth, let's say, $50,000 to wallet address ABC 123. It's not taxable, but it's reported. Step 3. From your hardware wallet, you send Bitcoin to Kraken because they have a coin Coinbase doesn't offer. Kraken reports receiving Bitcoin from wallet ABC 123. Now the IRS knows ABC 123 is connected to both your Coinbase and Kraken accounts. Step 4. You sell the Bitcoin on Kraken. This sale is reported, but remember, for 2025, Kraken doesn't know what you originally paid on Coinbase, so they report the sale amount with no cost basis. You could have bought at $70,000 and sold at $50,000, losing $20,000, but the IRS just sees a $50,000 sale. This is where things get dangerous. If you don't properly report this on your tax return, the IRS might assume that entire $50,000 is profit. They could send you a CP 2000 notice, a bill for taxes on $50,000 of income you never actually made. And if you ignore that, you're now on their radar for cryptocurrency tax evasion. Let's talk about who this affects most. If you're a simple investor who buys and holds on one exchange, never moving your crypto, you'll be fine. Your exchange knows your cost basis. They'll report everything correctly in future years. But if you're like most crypto investors, moving assets between wallets and exchanges, using DeFi protocols, or mining, you're in for a complicated tax season. Speaking of mining, here's what miners need to know. If you mine at home with your own equipment, that's not currently reported on a 1099 DA. But if you use a mining service or cloud mining, that company might issue you a 1099 DA for your mining rewards. For validators and stakers, it depends on the platform. Centralized staking through exchanges will definitely be reported. Now what about DeFi and decentralized exchanges? Good news and bad news. The good news, DEX like Uniswap or PancakeSwap won't issue 1099 DAs. They're decentralized, there's no company to issue the form. The bad news, you still owe taxes on those transactions. And now, with the IRS tracking your wallet addresses from centralized exchanges, they can potentially trace your funds into DeFi protocols. They see money leaving Coinbase to your wallet, then they might investigate what that wallet does next. Here's what really worries tax professionals. The IRS is building what I call a crypto surveillance network. Every year, they gather more wallet addresses, more transaction data, more connections between accounts. In 5 years, they'll have an incredibly detailed picture of the entire crypto ecosystem and where you fit into it. And remember, blockchain transactions are permanent and public. The IRS can go back and analyze old transactions with new information. That DeFi trade you made in 2021, if they connect that wallet to you through a 2025 1099 DA, they can revisit those old transactions. So what should you do right now? First, start keeping meticulous records immediately. Every purchase, every transfer, every sale. Document the date, amount, wallet addresses, and purpose. Second, consider consolidating your crypto activity. The more exchanges and wallets you use, the more complex your reporting becomes. Third, if you've been casual about crypto taxes in the past, consider coming clean before the 1099 DA spotlight hits. The IRS has voluntary disclosure programs that can reduce penalties. Fourth, understand that transfers between your own wallets are not taxable events, but you'll need to prove those wallets belong to you. Document ownership of every wallet address you use. Fifth, for complex portfolios, you absolutely need professional help. This isn't TurboTax territory anymore. One wrong move could trigger an audit or massive tax bill. Here's the reality. The 1099 DA isn't just about reporting your crypto taxes. It's about the IRS finally having the tools to enforce crypto tax compliance. For years, crypto investors have operated in a gray area. Many didn't report, many reported incorrectly. That era is ending. Starting with tax year 2025 filed in 2026, the IRS will know exactly who's trading crypto and how much. They'll know if you don't report. They'll know if you report incorrectly, and they'll have the wallet addresses to dig deeper if they want to. This is what I tell every crypto investor. The game has changed. You can no longer treat crypto like it's invisible to the IRS. Every transaction leaves a trail, and starting in 2025, that trail leads directly to a form with your name on it. The choice is simple. Get ahead of this now, or deal with the consequences later. Because when that first 1099 DA arrives in 2026, it's already too late to fix 2025. The good news? You have time to prepare. Clean up your record keeping. Consolidate your accounts if needed. Get professional help to ensure you're ready. Don't wait until January 2026 when these forms start arriving and everyone panics. Don't be the person getting a CP 2000 notice for unreported crypto income. Don't end up on the IRS's crypto watch list. Subscribe for more crypto tax updates and hit the notification bell so you don't miss our weekly videos.